The story from the project, innocent black man. Let me be clear. Damn, man. The story from the project, innocent black man.
What up, YouTube? Welcome back to the Small Account Challenge. Today is day number 71. I got a treat for you at the end of this video. I'm going to be talking about the mindset needed to be successful at trading. So please stick around for that, because that's where a lot of traders kind of fail at. Anyway, as you can see, I'm wearing green, so you know what that means. It's Money Mondays. And on Money Mondays, we take it to the house for the spouse. That's exactly what we did today. In the pre-market, I saw everything was red, so I knew what position I was going to be taking this morning. And I did exactly that. Stuck to my guns and came out on top. And I'm telling you exactly how we came out on top. And today, midday market recap. All right, y'all. So let's go over the trades from this morning. You know my laser focus is on SPY, and at the corner of my eye, I'm watching that at Meta. Anyway, my first trade of the day was SPY to the upside at 932. Let's pull it up on the charts. The daily chart showed that SPY had broke its upward trend, so you know what that means. That's probably why we're going down, because it broke the trend. Anyway, let's pull over to the 5-minute time frame, because that's the chart I like to trade on. Okay, cool. At 932 to the upside. The reason why, and you know I don't like to trade the first candle, but SPY had gapped down so heavy, and anybody who was in it overnight or over the weekend to the downside, they cashed out pretty heavy. So because they cashing out, buyers covering their positions, shorts covering their positions, SPY started to squeeze up. And because it was just a high probability setup, I jumped in 932, rolled it up, and caught a nice trade for our first trade of the day. You know, when your first trade of the day is good and you're green, you're not trading from a position of handicap. And that's how I like to trade. Anyway, my next trade was on my normal setup, which was 935 to the downside, because after the shorts started covering their positions, they started to hit some resistance. That means now people are slowing down, and that's when I jumped in at 935 to the downside. And originally it was heading down, and today I was really fast on the trigger. Got in, got out fast for another win, because it turned into a green candle. But before I got out of it, it was going down red. Anyway, that was our second trade of the day. Our third trade of the day was at 940 to the downside. Now, after those first two candles closed green, and it runs up to a key level of resistance, which was 598.53. That was my first level I have on the chart there. You can see it there. That's my first level of resistance. It runs up to that one. So now I know that's acting as resistance. I jump in on that one to ride it down, and that's exactly what it did. It rolled down, and we got another green trade on the day. Today, I had the pulse to SPY. As a matter of fact, I didn't lose no trades today. Anytime you have a day like that, you know you really feeling the pulse and the heartbeat of a stock. That's why I shortened my watch list, because I wanted to really focus on one stock for the most part, just to get a feel for that stock. And SPY is that stock right now. So anyway, we caught a nice trade on that one. And remember, our goal is to get 3% every day of the current balance. I don't gotta go crazy and try to get a whole bunch of money, because 3% consistently, or average 3% over the next 70 days, will change the account. That's all I need to do, and just keep the losses tight. Anyway, on my next trade, which is 941 to the downside, I was in that same candle that flushed down. I jumped in again because it continued to flush down, and we did well, I'm gonna call it break even, though we did walk away with $1, because as it popped down, we tried to get out and it didn't let us out. And right, I changed my my sell position, and we was able to get out for $1. Anyway, I'll take it. And that was our fourth trade of the day. And on our final trade of the day, which was at 10:30, this was to the downside. Now, I started to leave SPY alone for a little while, and I sat on my hands for a little while, because now the market's starting to slow down, volume's starting to slow down. So now I'm waiting for another entry. I'm about to walk away from my computer and do this video. But I said, I think we got one more trade in us because we was just under 3% for the day. And anyway, I saw SPY started to squeeze at around 1025. It breaks through the 10 EMA, so I know that's not holding no resistance. Then it breaks through that earlier resistance, which was 598.53. It breaks through that, which I thought it would do later on. And I was right. But also had another level I was watching, which was the 599 level. Yeah, 599.55. It begins to run up to that level. I jump in at 1030. So I'm on this candle here, 1030, waiting for it to reverse. It continues to squeeze up. And when it gets to that resistance level, I add because I have conviction that that level is going to hold. And it does exactly that. We hold on to this all the way in 1042. It begins to flush. And that's when we sell our position and we get out for a nice win. And that's how we end up crossing the 3% mark. You can see it there. We'll take it. So tomorrow we'll try to get 3% on that current balance. So that's how our day went. Another nice day for us. We'll continue moving forward, trying to get to our goal, which is the $100,000 mark. That's the first level. But first we gotta get to the $2,000 level, which is what we're striving for now. So anyway, so now let's get into today's conversation and lesson, which is going to be talking about the mindset to be successful when trading. Let's talk about that now. All right, so let's talk about the mindset and the kind of thinking you need to have to be successful at trading. I was watching a video this weekend of a YouTuber who had somebody on, and the dude was talking about he's been trading for the last 9 months, and he's really been down on himself. But he also has been kind of excited a little bit for the fact that he is showing growth. He's not profitable yet, but when his initial thinking when he first got into trading, we thought it was going to be easy. He would just get in, start making money. Trading, let me say this, trading, especially day trading, will probably be the hardest thing you will ever learn to do. Because trading requires a unique set of skills. First of all, you got to learn how to read charts to even trade. You just can't. Now, you're going to be an investor. You ain't got to worry about that. You just going to have time in the market. Drop your money in there, set it and forget it. But if you're going to trade, you got to know what everyone else is trading knowing. So that's number one. You got to know how to read the charts. But that's just the first part. Reading the charts. And you don't got to read all the charts. You just got to know exactly what you're looking at, exactly what you're seeing, and know what's happening. And know what's the probability of the next thing happening. But I will say this. The next thing, which is to me, which is key, is the mindset. The mindset is this: when you are trading in the markets and you get into a position and you're shaking and nervous, it's because you have overextended yourself. Meaning if it goes against you, now you're highly upset, it's highly emotional. You should never trade in such a way where you get into a position that you're shaking because you have too much risk on the table. You want to trade in such a way that if it goes against you, okay, that's a loss. And you go in thinking how much you're willing to lose. This is why you hear me talk about a lot of times the guardrails. I kept the guardrails on today. The guardrails. Now, what are the guardrails? In case somebody was asking. The guardrails is what I call OCO orders. I talked about this before in the video, talking about orders or order types. OCO orders. OCO orders stand for one cancels the other. Meaning the minute I get into the trade, I know my profit target and I know my stop loss is already set. And I can choose to move that as the stock goes in my favor or goes against me. But at the same time, if I leave it set and the stock goes against me, it pops me out. That's the end of that discussion. And that means I was wrong on how the stock was going to move. That's all that means. That's the purpose of keeping the guardrails on. When you first learn how to ride a bike, they put training wheels on. Why? Because you don't know how to stir the bike. So to remove my emotion from the trade, I put an OCO order, or I call it the guardrails. That way, if it goes against me, oh well, I'm out the door. I was wrong. I ran into a trader over in the summertime in Starbucks. This guy, he's been trading since 1986, and I only learned about him because I was standing outside the window and I looked inside, so he had his computer open and looking at charts. So when he came outside, we got into a conversation, and he had bought he wrote a book. So I bought his book, and in the book he said, if you're wrong about a trade, why do you continue to hold the trade? If you're wrong, get out. You were expecting it to go a certain way, and it didn't. So get out. But see, a lot of times, the mindset and the emotions, you're hoping for the stock to do something else, but you were wrong. That's when you get out. And what happens with that is you begin to hold your losers longer than your winners. So now when it's time to recover, all you're doing is just recovering a loss. So you take one step forward and 2 steps back. The mind frame or the mindset necessary to be successful at trading is you have to almost be robotic. That's the purpose of having an edge. Meaning this, a criteria set that you follow that guides your decision making when making a trade. When the criteria is present, you take the trade. You don't just jump it into your play. Once the criteria is set, you take the trade, and if it goes against you, you're out. And to even help you with that, the guardrails. As a matter of fact, if you have a job and you have a pension and money comes out of your paycheck and goes into your pension automatically, the job decided that they will make a decision for you in your benefit. Because if it was up to you, you would look at your bills, look at your check, and say, you know what, I'll do it next time. But since they know that people are like that, they say, you know what, we'll just make the decision for you, take a portion out and put it into your pension or to your retirement without you even making a decision. That's the purpose of guardrails and being robotic. It's automatic. This way, you remove the emotion from the trade of selling and buying, and at the same time, the trade can go in your favor or go against you, and you're not worried about it anymore. This is the mindset that you need to be successful at trading. You have to remove emotions, and you have to be robotic. A robot will do something without emotions. I don't know about AI now. I'm not talking about this normal robots that I know growing up as a child. Robot, they have no emotion. If it was set to do a certain thing, it did it. And that's how you have to be in this game. It is a must. You have to respect your rules. You have to have a plan. Remember the video I talked about it. Like I said, it doesn't matter who you are. As long as you have a plan, that's it. The plan is what guides you. If the plan says we trade at A, whenever the stock hits A, we're in. And it says we get out on B, when it gets to B, we're out. There's no necessary. Today I have buying power left. I mean, I could trade some more trades. But the profit target was 3%. We're at 3%, so we're out the door. There's no need to do anything else. Tomorrow's another day. And as a matter of fact, I learned this from Ross Cameron when I first got introduced to him years ago. When I was first learning how to trade. He used to always say this, and it got into my system. Whenever he had a red day, years ago, this is back in 2017, this became his motto. Tomorrow's another day. That's it. They say that. Once you have a red trade or you down for the day, just say, okay, cool. Tomorrow's another day. Close the computer and be on your way. That's it. That's how you have to look at trading and have that kind of mind frame. Anyway, I wanted to have a quick conversation with you guys about the mind frame for trading. Anyway, we'll be back at this tomorrow for day number 72. All right, y'all. Have a good one.